So with all the latest news about people becoming millionaires in the stock market, you might be wondering, what is the stock market and how do I invest? Well, the stock market can seem scary and confusing at first, but it's not as difficult as it seems. So here are some basics to get you started. Let's say you own a lemonade stand and it's doing pretty well, but you want to expand and open up more stands. To do this, you would need money, lots of it. Once you have opened your account and deposited funds, you can start buying shares of stock. Now let us talk about some key terms that you need to know before investing in the stock market. You could ask your friends or family for a loan, but if you wanted to expand quickly, you would need more than just a few $1,000s. A stock represents a share of ownership in a company. Well, there are three main things you need to do. First, you need to start investing early. The earlier you start investing, the more time your money has to grow. This is when they try to buy stocks when the market is low and sell stocks when the market is high. Do not invest money that you cannot afford to lose, and always do your research before investing in a stock. The SEC has a website dedicated to teaching people about the stock market. I hope this video has helped you learn more about the stock market and that you will consider investing in stocks. Remember, the stock market can be a great way to grow your wealth over time, but it is important to remember that investing always carries some level of risk. Do and invest money that you cannot afford to lose, and always do your research before investing in a stock. If you have any questions about the stock market, leave them in the comments below. Thank you for watching and good luck investing. Additionally, there are many great books on the stock market that can help you learn more about it. Some popular books on the stock market include The Intelligent Investor by Benjamin Graham, One Up on Wall Street by Peter Lynch, and A Little Book of Common Sense Investing by John Bogle. If you are unsure how to invest, you may want to consider working with a financial advisor. However, studies have shown that this is a bad strategy and that it is better to just stay invested. Trying to time the market is very difficult, and even the best investors in the world cannot do it consistently. For example, if you invest $1,000 at age 20, your $1,000 will grow to over $4,000 by the time you are 60. However, if you wait until you are 30 to invest your $1,000, your $1,000 will only grow to $2,000 by the time you are 60. That is the power of compounding interest. As you can see, starting early is one of the most important things you can do if you want to take advantage of the stock market. When you buy a stock, you are buying a small piece of that company. Second, we have a stock symbol. For example, instead of investing all of your money in Apple stock, you could invest some of your money in Apple, some in Google, and some in Microsoft. By doing this, you are reducing the risk of your investment portfolio. If Apple stock goes down in value, you won't lose all of your money because you have other investments that will hopefully still be growing in value. A stock symbol is a unique way to identify a company's stock. For example, the stock symbol for Apple is APL. Third, we have market capitalization. Market capitalization is simply the total value of a company's stock. It is calculated by multiplying the current share price by the number of outstanding shares. Fourth, we have dividends. Dividends are a portion of a company's profits that is paid to shareholders. Not all companies pay dividends, but those that do typically pay them quarterly. Finally, we have the Dow Jones Industrial Average. The Dow Jones Industrial Average, or DJIA, is an index that tracks the price movements of 30 large, publicly traded companies. The DJIA is considered to be a good gauge of the overall health of the U.S. economy. What if there was a way that you could offer a percentage of ownership in your lemonade empire in exchange for money? The power of stocks is the ability of the stock market to generate wealth over time. The S&P 500 is an index that tracks the price movements of 500 large, publicly traded companies. Since 1980, the S&P 500 has increased by over 15,000%. If you had invested $1,000 in the S&P 500 in 1980, your $1,000 would be worth over $15 million today. That is the power of the stock market. This is because when you buy a stock, you are investing in a piece of a company. And as the company grows and becomes more profitable, the value of your stock will increase. Additionally, most stocks will pay you a dividend, which is a portion of the company's profits. Over time, these dividends can add up and make you a lot of money. And if you ever wanted to sell your business, you could then sell the shares of your company to someone else. That is what going public is all about. A company goes public so that they can raise money by selling shares of their company to the public. First, we need to understand what the stock market actually is. There are many ways to invest in stocks, but the easiest way is through a brokerage account. A brokerage account allows you to buy and sell shares of publicly traded companies. The two main types of brokerage accounts are full-service and discount brokerages. Full-service brokerages will generally charge higher fees, but they will also provide more services such as financial advice. Discount brokerages, on the other hand, will generally charge lower fees, but they will not provide any financial advice. Some popular discount brokerages include Moomoo, Webull, and Trade 212. The stock market is simply a place where you can buy and sell shares of publicly traded companies. When a company goes public, they will sell shares of their company to the public. For example, when Facebook went public in 2012, they sold shares of their company to the public and raised $16 billion. This allowed them to expand their business and hire more employees. In return, anyone who bought shares of Facebook early on would receive dividends and have voting rights within the company. Now, why would a company want to do this? Well, think of it like this. In exchange, the public gets an opportunity to own shares of a company and receive dividends from the company. The next thing you need to do is open a brokerage account and deposit funds into it. First, we have stocks versus shares. Stocks and shares are basically the same thing. Now that you know the basics of stocks, let's talk about the power of stocks. A great example of the power of stocks is the S&P 500. So now you're probably wondering, how can I take advantage of the power of stocks? Second, you need to diversify your investments. Diversification is simply the act of spreading your investments around so that you do and have all of your money in one place. Third, you need to stay invested. One of the biggest mistakes investors make is trying to time the market. Investing in the stock market can be a great way to grow your wealth over time, but it is important to remember that investing always carries some level of risk. If you want to learn more about the stock market, there are some great resources available online, and that's it. Those are some basics to get you started in the stock market.